What is up, guys? It's your boy No Risk, No Premium, back with another episode of the Sunday Sermon, guys. This is just a quickly pre-recorded Sunday sermon on this Sunday, or Sunday sermon on this Sunday evening. I apologize being late. Had a rather busy Sunday, family things, obligations, etc. But I want to get this video out to you guys. I know it's late on the East Coast. Appreciate you guys rocking with us, but those on the West Coast hopefully can snag this video before you go to bed. So without further ado, I will get right into it and just get you down to the meat and potatoes of what you need for this week. I think all eyes this week is really going to be on this one event that's going on, FOMC meeting. This is the one where Powell speaks, right? So they have a meeting, all the notes drop at 2 p.m. Eastern Standard Time. Then he comes on for a presser for about 45 minutes to an hour, where the market gets volatile, to say the least. So up until then, as far as anything that would drastically move the market, no. Home Builders Index Monday, housing starts building permits Tuesday, and then Wednesday is Big Daddy P, or Jerome Powell, head of the Fed. On to Thursday, right? You've got jobless claims Friday, normal Friday type data there with a few Fed speakers as well. So Wednesday to Thursday is going to be insane. So I think there is a good possibility that when the market is waiting for data like this rate hike decision that is going to be coming, it could stay in a balanced range or just not have an overwhelming of people trying to speculate one way or the other, pushing the market one way or the other. They would rather wait for this data print to come. So for me, guys, it's going to be looking in this range here. We have the contract roll on the ES chart, so it looks very funny, but this really is just this range right here. I would call this the little balance zone it's been in. We had the look below and fail, right? We had the contract look above and fail. So for me, I'm going to be watching this double bottom, 44.95, right? Pretty easy to see. Watching if we hold that all night and we take out 45.09, I'd be looking to the upside, absolutely to the upside. Maybe fill this little bit of fair value gap, right? Or maybe just come back and retest this 45.40 area. But I'm looking if we hold 44.95 all night and are above or take out 45.09 early in the morning. I want to look at 45.25, 45, 45, 45.60. The levels have been the same. We've been in the same area. Look how congested it is, right? So it's pretty easy to see, right? You can either play the break or bounce. So 44.95. You have a good levels to the downside. For a short, you have definitely a short opportunity down to 44.68, which is about the contract roll fill gap. I'd be looking for bounces down there, and at 44.50, 44.35 as well. I'll be looking for bounce down in that area. I'll be looking for rejects up here at 45.60. Now that's really the ES chart that you want to pay attention into that FOMC decision. SPY chart. This one's going to look a lot cleaner than the ES chart because there's no contract roll on it. I do want to point something out here on the weekly. Yes, cup and handle, blah, blah, blah. We got a double inside week. We've got a double inside week. So you want to talk about tightness, you want to talk about compression. It's really easier to see now when you zoom out and look left. You can see how big 451 is, 451.50. You can see how massive 442.50 is, right? So what would you think be the game plan was, knowing what I just said for the ES chart, right? You're looking for bounces at this double bottom. You're looking for rejects at the triple top, right? But this is almost like a quadruple bottom, quadruple top if you're just looking at the wick or the bodies, right? Bodies and wicks, right? Whatever. But for me, it's 442 breaks, 442.50 really to play it safe. You can really get going to the downside down to 439 and then 436, 435 into there, right? So you can look for the bouncer break here. Same thing to the upside, 451.50. Break and hold above that. We're pretty much going to that gap on the daily up here. Let me zoom out real quick. Sorry about that. It's going to look very ugly. We've got the gap on the daily we want to target, right? Got that gap on the daily I want to target. So you can see 442.50 and then 451, right? You can see where we had gap down, rejected there into the Friday or Thursday, closed into the Friday, right? So watch 451.50 to the upside, watch 442.50 to the downside, and don't diddle in the middle. Keep it simple. Right, keep it simple. But just know if one breaks to either side, that double inside week, there's going to be movement and continuation. So don't fight it. If it breaks, the price is showing you that it's a break and hold on these higher time frames, like a 1 or 4 hour on the daily. Get that break above those key levels, right? Don't fight it. Don't fight it, right? Like if we break this 451, right, 451.50, I'm going to target 453.50 and that gap all the way to 455. And that's telling me you're going to look to buy the dip at that point. Right, if we break and hold below 442.50, right? Look for retest in those areas to confirm, and then look for the downside levels. Okay, guys, do not fight price. Price is true and unbiased. If you have a bias in the market, it will fuck you up. Okay, on to the Qs. Going to be kind of the same. Game plan is the SPY chart. Why? Double inside week here. Double inside week. We got a lower high and a higher low, right? It's all price inside of the previous candle. Twice shows compression, shows consolidation. We should see a move. So 369 is my level to the downside. 378 is the level to the upside. You guys know what to do. You play bounces here, or break and holds to the downside. You could target 360, 650. I like that for a bounce zone. At break and hold or reject 378 or break and hold 378. Boom. There you go. There's your game plan for the week, at least going into FOMC. After the rate hike decision, when I believe the market would break one of those levels, we'll know with the true market reaction to the move. Okay, so zooming down to the 4-hour here that I like so much, I'll just reiterate these levels. We got, is my mouse dying? This would be a horrible time. Nope. Okay, never mind. Oh, whoa, what was that? Okay, here we go. Almost done. Look, 369 to 370. I'm looking for bounces in there, break and hold rejects. See if we fill this this demand candle down to 366.50. Okay. If not, look for the reject 378. Look for the reject 378. Break and hold 380 is the level above. 380 is the level above. There you go. Last but not least, IWM, and I keep you on your way, and you have a great rest of your evening. You wake up early tomorrow and have a great trading day. IWM, last but not least, 182.50, 182.50, 182.50. Looking for bounces to hold into there. Why? Lots of bounces in that area. So let's play the bounce. Well, let's play the bounce. We got a break and hold above. Now it's going to be 186. It was 185 and we got it, but you could argue what? We had a look below and, bounce, and we had to look above and fail, right? So it's just price is just getting tight in here. You're going to want to watch bounces at 182.50. If we break and hold below 182.50, look for the bounce at 179.50, but you have room to short. You have room to short. Need a break and hold above 186. 186 will open up 188, 189, 192 above there. And guys, that's all I got for you. I wanted to keep it short, simple, sweet, and to the point. Hope you had a great weekend. Okay. Of course, you got to wake up early, get your levels right, and not do anything fucking stupid. We'll see you bright and early. Peace.